Tata Motors. It's a stock that we've been looking at very closely, and among other things that investors are paying attention to, it's the plan to demerge the commercial vehicle and passenger vehicle business. That's something that's on the cards. At the annual press meet of Tata Motors, my colleague Puneet caught up with Shailesh, Chandra, who's the managing director of the company, to talk about the strategy going forward. Listen in.
Growth of the cars in India. Now, last year was a very subdued year, just 2 to 3% growth that we've seen. And it was a tough year for the industry as a whole, as well as for Tata Motors in terms of sales performance. Before I get into specifics, what is the kind of expectations that you have for FY26? Because it will be a year of multiple new launches. So is the expectation largely around similar to, I think the outlook was 3 to 5% last year. Any kind of estimate and guidance that you can give us in terms of sales performance for this year?
So see, post-COVID, there was a significant growth that the industry had witnessed. We must realize that FY20 to FY25, the industry has grown from 2.7 million to 4.3 million. That's a steep growth. It is only in the last 2 financial years that we have seen moderation. In FY24, it was about 8% growth, and as you said, in FY25, it was 2 to 3. This year, the good news is that it has sustained at that level. So I'm seeing the brighter side of it. And this year also, basis whatever we have been triangulating based on, different agencies, what they have been talking within SIAM, what is the triangulated view, it is coming to us a 5% kind of a growth rate. So therefore, within this 2 to less than 5% growth, there will be certain segment which will do better, right? For example, SUVs, CNG, EVs, all these segments should do good because of more action here. Greater positivity around SUVs and CNG has been there for last multiple years. EV, there are a lot of launch action. Many players are now participating in this category, so it should see a boost also, is the way I see. For us, the last year was more challenging than the industry because primarily of the hatches segment, because in SUVs we grew better than the industry. Even in CNG, we did much better than the industry, but in hatches, the 2 products that we had aged, and therefore it declined more than the industry decline in hatches. This year we have refreshed those 2 products, so we should be in a better position. In SUVs, we are adding a new nameplate, which is Sierra. In EVs, we are going to add Harrier EV and Sierra EV to the mix, and there are certain interventions in the current products also that we are doing. So it's a strong product cycle year for us, and therefore for ourselves, we are slightly more optimistic as compared to the industry.
Just continuing with the point of new nameplates, because we've seen, as you mentioned, a lot of new nameplates for you as well, but that is also expected for the industry. So how should we look at in terms of both the growth for the industry if you're expecting sub 5%? Will it be that market share will be taken from other players for Tata Motors?
Why I'm saying that, because hatches was the place where we declined the most, and therefore our base is very low. From the high base of FY24, we actually went down by 60,000 in terms of number of units. As soon as we launched Tiago Refresh, we got a 20% jump. And similar is the case for Altroz, where we are seeing very strong bookings coming. So because we have a low base, I think we'll have a strong growth in hatches as compared to industry, which might further see decline. And as far as SUVs are concerned, I think we grew better than the industry. So with a new nameplate and very strong performance of Nexon Punch, which has been ongoing for multiple years, it has been among the top selling SUVs. We are optimistic on the SUV side also. So that's the reason why I'm saying that we should definitely aspire to have an industry-beating growth.
And one of the key aspects that we've been speaking to a lot of auto ER&D companies as well, and they've given the challenge, especially of course in the export market, but also in the domestic market, of having conversions being very slow. In your estimate and in the companies that you work with, what could be one of the key challenges for this? Is this because of industry performance, or have you also changed a few things within Tata Motors in terms of showing that? Because we have a few listed companies as well which have called out, stocking numbers as well as, projections for this year to be very limited. So what could be one of the key reasons for that?
You are saying conversion rate.
Yeah, in terms of converting it to clients and then eventually to orders, that has slowed down dramatically for the auto ER&D companies.
Well, frankly, I can't talk about the other companies, but you have seen our investment numbers. It has only been growing over a period of time. And we are very optimistic about the future, especially the India growth story. And we already declared that we are going to invest 33,000 crore to 35,000 crore. That is not the investment that we made in the last 5 years. So therefore, I can only speak about ourselves that we are going to invest. We see the India growth story going up to 6 million from 4.3 million in the next 5 years. If there are significant trajectory change than what we are projecting, of course we will look at it. But I think as far as India is concerned, the OEMs are making strong investments. In other geographies, we'll have to really look at. I can't comment much on that.
One of the biggest aspects for Tata Motors this year will be the demerger. Do you think that the commercial vehicle division, with its robust financial performance, will be one of the biggest beneficiaries coming out of the demerger? Because you're already at almost 12% EBITDA margins, and and that's considerably higher compared to the cars business. But looking forward, what are some of the key aspects that you see for the commercial vehicle division? And as I mentioned, do you see that as one of the biggest beneficiaries with the focus coming on the business by the end of this fiscal year?
That's right. I think, we are very keenly looking forward to this demerger. And as you rightly said, in addition to robust margins, I think we've been also delivering very robust free cash flows and very high return on capital employed. In fact, it is amongst the global top 2 in the commercial vehicle industry. So I think the business on standalone basis has been doing pretty well. As a strategy, actually within the commercial vehicle business, we have divided ourselves into 8 sub-businesses, 4 of which are product businesses, which are more linked to the total industry volume of that year and therefore are a bit cyclical. And then we are looking at 4 other businesses which are linked more to the park size, right? And therefore they are not cyclical. So apart from robust financials, what we've also therefore done is increase the focus on this non-cyclical businesses, which would mean that we should be able to deliver more resilient margins through the cycle and therefore reduce the impact of cyclicality onto the margin. So I think that is what we are aiming at. And in addition to that, since we are delivering robust free cash flows, we'll have cash on the balance sheet. I think that also gives us opportunity to grow within the segment.
And specifically, we have seen that, the infrastructure spending was largely, used to boost the commercial vehicle sales. You spoke about the non-cyclicality of the business as well, in terms of macro conditions. How much of that, at least in the near term, do you see? Because we've already seen some spending from the government start, about 2.5 lakh crores is what they've spent in March of 2025. How much do you think that will translate to sales for you specifically in the near term as well?
So the infrastructure spend is very, very important for the commercial vehicle industry. And in addition to that, I would say, I think the growth that is projected for some of the key sectors like mining, steel, cement, e-commerce, and also for that matter, consumption, I think these are very important drivers for commercial vehicle industry volume. As of now, apart from the GDP and the infrastructure spend that you said, all these factors seem to be doing well. And therefore, we are quite optimistic about the volumes of the commercial vehicle industry going ahead. Yes, there will be some events which will be happening, whether it is a geopolitical event or what we are going through now currently, and whether it will have an impact on fuel prices, etc., is something that to be watched for. But otherwise, I think on a 5-year basis, we are quite optimistic on the volumes that the commercial vehicle industry can achieve.